Brigade presents The Realty Debate, powered by Reliance Home Finance with Manisha Natarajan.
Precisely 2 weeks ago, United Kingdom voted for Brexit or UK's exit from the European Union. While initial reactions to it came as an event with large economic impact, it's quite clear now that Brexit is way beyond that. It's an event with great historical manifestations. Well, no wonder it continues to make headlines and will do so for months on end. Today on the Realty Debate, we are going to look at Brexit from a real estate perspective. Will it have an impact on Indian real estate whatsoever? And the answer to that will emerge from whether it will have any impact on the Indian economy. And the second curious question, will it become cheaper for the rich and famous of India to buy property in their favorite international city, London? My panel today, Anuj Puri, Chairman and Country Head, JLL India. Also with me, Om Ahuja, CEO, Residential Brigade Group. Anurag Jawar, Business Head, Consulting and Data Insights, PropTiger.com and Makaan.com. Also Kalyan Chakrabarti, Managing Director, Rising Straits Capital. Gentlemen, thank you very much for joining me. Before I go to my panel with the questions, let's just set a perspective of this debate. Now, Brexit impact on London property. It's been talked about, debated, discussed. Indian property, some arguments say, Indian property buyers could benefit as prices fall and the pound weakens. Indians needed around 98 rupees to buy 1 British pound on January 1st, 2016. But now they need only 91 rupees. It's still not cheap, but it's come down substantially. That's a 31-year low for the pound. Analysts expect the pound to be pounded more and the value coming down. Counter argument to this, Indian investors have been or had been investing in London as it offered appreciation and stability. But this stability will now be impacted and they're not likely to go back to that market. The political uncertainty will either prompt investors to look for safer markets or stay put without committing more capital to avoid risk. The second big impact, Britain's decision to exit from European Union might make it difficult for Indian developers, that's Lodha Group, India Bulls, to profit from their multi-million-dollar bets in the London market, and they've committed quite a bit of money. Counter argument to this is the sharp correction in the pound and the need of the UK government to attract foreign investment will ensure that London real estate market remains attractive. Okay, Anuj Puri, first to you. I've read a lot of your comments after Brexit, the aftershock of this decision. It's already seemed to have hit London's property market, hasn't it? So what do you foresee going forward?
So it is correct, Manisha. I think you summarized it very well in the opening comments itself, that there are two sides to the argument. And clearly at this moment in time, there is a nervousness that has been created in the UK economy. Certainly we are seeing lackluster approach by the investors who are looking to commit more monies into the London real estate properties. But I've got really three arguments that I believe are going to go in favor of London. In the short term, there's no doubt that there is going to be an impact, and you summarized it very well, that the impact is coming in largely from the devaluation of the pound. If the pound continues to get more battered, it probably becomes even more attractive for the foreign institutional and retail investors to buy properties. You're right, 4 weeks ago, the properties in London for an Indian buyer, for example, were 10% more expensive than what they are today. If the pound continues to go and devalue, Manisha, it will become even more attractive for some of the Chinese, Russian, and perhaps Indian buyers to buy. The second is, UK is a world economy. I mean, London is a financial hub. Temporarily, it will have an impact, but I think long-term, it will come back. It is very cosmopolitan, it's very international. I do not see it getting battered to the extent that the market will only go down by 30-40%. It's not what we expect to happen there is. Okay. The third, what remains to be seen is how the corporates behave, Manisha, because if the large banks decide that they were going to relocate from London into Europe, and we heard immediate news of some of the multinational banks trying to do that, then it can have a more profound impact on the economy, as a result of which in the mid to long term, then it can have a more profound impact on commercial and consequently the residential real estate. But perhaps too early to say on the third point that how that impact is going to interface with the corporates looking to either move their headquarters from London to Europe or continuing to stay in London.
Okay. Anuj, are you at all worried about UK's legal framework for foreign investor, which includes their tax structure? So recently there was a hike in property tax, and most analysts are now saying that it's actually good that property prices have melted. That's helped absorb this tax increase. Central London, for example, I mean, despite the Lehman crisis, was one market which was so resilient that it just never came down. So and a lot of it, like you rightly said, is driven by not British residents but outside forces or outside residents. Is this legal framework of foreign investors likely to change? This whole xenophobia, I mean, the whole Brexit was because they did not want so much of immigration to come in.
You're very right, Manisha, and it's a very interesting and important point what you highlight. That is there a thought that given the populism that they have had, or given the sentiment with which the British voters have voted Brexit, would it have an impact on the policymakers to make sure that they become a lot more nationalistic in their policies and in their approach? I dare say, Manisha, and there's been a lot of analysis that has been done. I feel that it was at the heat of the moment that the vote was done, and perhaps when the British people are now realizing what that Brexit means, I'm not so sure if there was another referendum done, whether they would vote in a similar fashion. So I think policy changers understand that there was a sentiment, there was a wave, and that unfortunately made Britain leave the EU. But I dare say that the policy makers are going to look at that as a big influencer and start to make policies which are more nationalistic in their approach.
Okay, that's a very interesting argument. That, I mean, they will have to show that they remain one of the chosen destinations for investments. Kalyan, would you agree with Anuj on some of the key points made that, look, short term you would see some impact of the pound getting battered, but long term you would get some resilience back in the real estate market of London?
Yeah, I guess directionally I do agree with Anuj. Having said that, I have a slightly different perspective as to why I believe the policies will be favorable. The way I read the nationalistic tendencies that many of these countries, or many countries in the globe, are now beginning to have, they are going to be extremely protective about jobs, but they would want money from everybody. So we don't want you here, but we want your money in the form of FDI or whatever different ways they want the money. And hence you would see extremely positive FDI policies in all these nationalistic governments, including Britain. I don't see any reason why that would be any different. But they will be extremely protective and restrictive when it comes to labor. So different factors of production will have different policies being on display. So that would be my view. So FDI, you should foresee a pretty good framework in my view. Okay. As far as the playing out of the Brexit per se is concerned, pound has lost close to about anywhere between 10 to 13% depending on which currency are you looking it against. And obviously that means there is likely to be incremental cash flows or fund flows going into Britain for asset purchases. But at the same time, I think the assets are going to become a bit volatile with respect to their ability to generate yield. There will be pressure on yield generating assets for sure, maybe with the exception of hospitality, because London is going to continue to have the same historical significance, the same cultural significance for people to flock to, and hence hospitality I do see an upside. But do I see the same with respect to, let's say, office space for that matter? I doubt, because I do see some amount of realignment happening. Like Anuj said, some of the European banks might consider downsizing or relocating or whatever that may be. I cannot see a positive impact. There will be either a negative to neutral impact. That might mean there could be a decline in rentals or maybe increase in vacancies. We do not know. The whole story needs to play out. But right now we are still in the corridor of unknown. We do not know lots of things as yet.
Absolutely. Lots and lots of unknowns, and that's the reason why we're doing this debate, because once it becomes known, then there is really no reason to actually look at the crystal ball and say which direction it could go in. Mahuja, how are you reading Brexit? I mean, really, there was so much of economic nervousness around it, and financial markets went into topsy-turvy. And I've also read the counter arguments where people have said, look, everyone who voted for Brexit is not an idiot. There is a whole generation of Britain people living in UK in the smaller areas and living at the margins who haven't actually gained in prosperity. And this is really a reflection of the larger income inequality or the widening in income inequality, not just in UK, but globally. How are you reading it? Are we all still only going to talk about the economics of it?
So again, Manisha, it's on the real estate implication point of view. If you look at specifically UK, and you have two sides of it. One is basically the student housing. There's a huge market in UK where you have a lot of universities attracting talent not only from Europe but from other parts of the world. Right. The implication of Brexit will basically be understood once we know how the students from other parts of Europe will come to UK, and how the UK housing market, that specifically the student housing market, will get implied. In terms of returns being guaranteed or products being sold in the past where you saw a good amount of decent returns being promised to investors, where you could invest into a student housing in other parts of UK, that will see a implication provided we see UK not getting students from the other parts of the Europe. That's a serious implication one needs to look into. The second part is London city as such, where you see job creation becoming a challenge eventually because of banks moving out, large corporate houses moving out. The UK market, London market specifically, has seen IRR of almost 23% in last 5 years, the growth. And that growth, if you look at pound sterling terms, but if you look at 10% depreciation in last 10 days, the net impact for an investor will be a negative in terms of net return over a 5-year period. So we'll have to see that the next 5 years...
You mean to say from positive returns, because of the pound devaluing, it's actually become negative return? All right, so let me ask, okay, has it become negative now?
No, net impact is primarily 23%. If you look at depreciation, if an Indian investor has invested into the London market, if you look at net return, it will be net of inflation, it will be negative.
Wow, okay. And here is a market that we used to think is never going to melt. Okay, the currency depreciation, I think, has been the biggest culprit here. Anurag, tell me, I mean, was there an extremely high interest amongst Indians wanting to buy real estate? So anecdotally, I know that every rich Indian wants to buy something either in London or New York, but how much of it is hyped up and how much of it is a reality?
So largely, people have been looking at it more from aspirational value. So today, if you look at all the continents, someone would like to have presence in London as well, because that's kind of a gateway to the European countries largely. And from Indian perspective also, all the ultra HNIs, they have had interest in London per se. Just to add on the pricing point, while I was following what is happening, I think 3 of the funds who had, I would say sterling denominated property funds have already marked down their valuation by 4 to 5% already after a week since the Brexit was announced. And then we are talking about 10 to 13% of devaluation. So already the impact on pricing is already visible. The biggest issue which might impact us is there are almost close to 3 million immigrant citizens in UK, which are from the European Union side. And if we are looking at the policy, which is still not clear from a 2-year perspective, and this is going to create issues on employment either by the companies which are moving out, I think from an investment perspective, this might still, people would need to wait and watch and see how the return on investment will come. Okay. But from an end-use perspective, I think the story is becoming clear. People might start looking and noticing and start finding out some lucrative deals.
That sounds too much, Anurag, that sounds too much like an Indian market. I mean, it's not an investor market, it's an end-use market. But here we are talking about people who really look at London as an investment destination. Look at Lodha Group. My God, I mean, they were looking at an ambitious target of clocking $2.5 billion from their project there. India Bulls acquired in 2014, picked up a prime property for 1,550 crores. They don't have the luxury of time, Anuj, do they? Of sales picking up. I mean, how does it work out for these guys?
So Manisha, very good point. And really it's not only these two guys, it is the entire developer community who's based out of the UK, who's going to get impacted. So, it will not be singled out that it's only India Bulls or Lodha, but it is the entire developers, who are building perhaps even larger projects than what, Lodha or India Bulls is building. I do see a little bit of a silver lining in the way the devaluation of the pound sterling has happened, because I do believe it becomes more attractive. I do feel is that the buyer, who's perhaps a more educated buyer, does know that there is going to be a limited opportunity for them to get in. And, Manisha, I don't know whether the opportunity is today or whether the opportunity will be 3 months down. But generally, when, I've been speaking with our London office, I think the intuition within the Londoner is that the market will come back. And it is not going to remain subdued for a very long time. I feel the developers who have an ability to remain nimble and be able to make the most of this nervousness to try and do more sales given the devaluation of the pound, or perhaps even more aggressive schemes or pricing, would be able to perhaps offload a lot of inventory in this nervous stage to some of the retail investors.
Fair enough. I think you've summed it up very well. So let's move on to Brexit impact on global and Indian markets. Well, the biggest fear that's going around is a possibility of Europe falling into recession, which Morgan Stanley says could trigger a 2-year global recession. Maybe these are early thoughts and people are now calming down, but these are some of the early reports that we definitely got. Positive though, which everybody is seeing. Bank of England Governor Mark Carney said last week on Thursday the economy would need more stimulus over the summer, given that the outlook has gone down. So most leading national bankers, not just in Britain but across Europe, are likely to keep interest rates low to ride out the uncertainty post-Brexit, which is good news for global economies. There are no immediate negatives for India, but general risk aversion will mean reduced foreign flows in the short term. If I look at the PE flows, though, into Indian realty market, Kalyan, these don't seem to be too much from UK, just $500 million, about 2%, and all of Europe, including UK, was even lesser. I mean, no, actually was about 8%, $1.9 billion. So how do you see the impact on global and then Indian economy?
That's correct.
Kalyan?
I think the global economy is waiting for the political certainty to come out as to who would be the leader and how the negotiation process starts. Once the negotiation process starts, one knows that the end is near. It's a matter of the process being followed, and it does not suit either European interest or British interest to take extreme positions. So my personal gut is the negotiations will be rather smooth and we will end up having a reasonably happy outcome. And my hope also is the same, because the world can't afford an extreme outcome in a negotiation scenario.
So you're not fearing any global recession. I want to hear that no one's fearing any global recession. I think that's exactly what I'm pointing towards.
I am not.
Okay. Oh, Mahuja, what about...
See,
Carry on, Kalyan.
Yeah,
Finish
I
then I'll
personally
talk.
don't, because I think the indicators are like that. I think the indicators are like that.
Okay.
Yeah,
Well, after Greece, oh Mahuja, if we literally were at the brink of a great fall and nothing happened, so this really to me seems to be a bit overblown in terms of the fact that this could lead to a global recession. Are you worried?
It's too early to comment at this point of time, because Greece was a different scenario, whereas in UK you have a scenario where it is lot more to do with the relationships with Europe. There's a lot more to do with their bilateral relationships with other countries. How this is going to evolve is a very new thing, whereas Greece is something which world has tried and tested in the past, that there's a scenario which you always bounce back.
Okay, fair enough. Anurag, I mean, as it is, you have, what are you going to tell your investors now? Stay put with India, forget about London, I'll get you super luxury properties in Worli?
I think India still makes a better sense with a lot of uncertainty on the London side.
Okay. All right, Anuj, I'm going to ask you to wrap out for us in terms of how are you reading the signals, again, contrary signals saying global recession versus the fact that now you will have benign interest rates across the globe and every government is going to be on a watch and cautious mode, and probably that's good for them. No one's going to get, comfortable.
So Manisha, certainly there is nervousness in the global community. Europe is a big part of the global GDP growth. Any negative impact coming out of the European Union's outfall with the Brexit and then the US elections happening later this year, coupled with perhaps a slowdown in China since the beginning of the year, could really lead to something which none of us want. So it is evident that at the global economist's radar, there is a thought, there is a feeling that there could be possibly something lurking out in 2017 that could damage the global economy. I agree with Kalyan, it's perhaps early to say, but I won't completely rule out, given what we are understanding and what we are hearing from the global economists, that if everything lines up in a negative fashion, then there could be a possibility that there is an outburst, which then India will get impacted. I mean, no longer we are insulated. We saw that, Manisha, in 2008 as well, after the Lehman crisis. We thought we were insulated. We were not. We took many years to have recovered. Perhaps in some of the sectors like real estate, we've still not recovered from 2008. So I would say I am a little bit more cautious at this moment in time with the development of Brexit.
Okay, so optimistically cautious and optimistic, or just cautious? We're going to wrap out there. I'm not going to ask for
Cautious.
cautious,
Just
okay.
cautious at this moment
No
in time.
optimism as of now. Yes, it's a very, very large event. I think what they've done is created history, and no one really knows how history plays out. I mean, it's only in retrospect you will be able to judge an event in its totality. Gentlemen, thank you very much for joining me. It's a very interesting topic. I mean, I'm sure we'll come back to it as events unfold, if they can make up in terms of who do they really want to lead that charge of Brexit, how will they negotiate, and hopefully EU doesn't feel slighted and they play the man with a larger heart, let's say, and negotiate more generously. Let's hope for that. When we come back, focus will move to smart cities. We had a Prime Minister who actually brought that back into focus by announcing several large projects at various cities across India. So was that noise worth it? Have we moved a year on from the time the mission was really announced to having something substantial on ground or not? That's when we come back.